Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So my kids were in town over the weekend, and we were looking through some old photos, and I ran across a picture of me in college, and I was wearing a t-shirt that said, "The future's so bright, I gotta wear shades." I love that t-shirt. I had actually forgotten about it, but when I saw it, I thought, I wore that t-shirt a lot. And I also had hair in that photo, which was kind of fun. But, anyway, as I was thinking about doing a show focusing on the silver market, it occurred to me that the slogan on that t-shirt might just be applicable for this show. Because there are a lot of people who see a really bright future for silver. I'm one of them. And right now in particular, there's actually growing mainstream bullishness for silver. And one of the reasons that we're seeing this kind of increased enthusiasm about silver is the rapidly increasing demand for silver, particularly in the industrial sector. And this has been being driven particularly by growth in the alternative energy or the green energy sector, most specifically solar energy. Now, dynamics in the silver market right now are pretty interesting because, in a lot of circles, there's this sense that it has underperformed gold. But the fact of the matter is silver was up 20.5% in 2024. It was among the best-selling or best-performing asset classes out there last year. It nearly kept pace with gold, and we all know how enthusiastic people have been about gold. But here's the thing. As gold has set multiple price records over the last year, silver has remained well below its all-time highs, around $20 below its all-time highs right now. And this has created this impression that silver is a laggard. Now, I'll be honest, I've been bullish on silver for quite a while. In fact, I've been bullish on silver long enough where there have been some points that I've started to second guess myself because it just hasn't closed some of the gaps that I've expected it to close. And the reason I remain fundamentally bullish about silver is because it's just way underpriced given the supply and demand dynamics. And as I said, the mainstream seems to be starting to move in that direction as well. They're starting to see these same factors in place. For instance, Saxo Bank head of commodity strategy Ole Hansen recently said that silver's dual role as a monetary and industrial metal creates the potential for a strong upside in the coming year. And he actually put a number on it. He projects a 30% gain in the price of silver for 2025. So that would actually be better than what gold did this year. He noted that in 2024, quote, increased industrial demand helped create physical tightness in the silver market. Sectors such as electronics and renewable energy, particular photovoltaic solar technologies, significantly contributed to this surge. Now, whenever I talk about so-called green energy, I think he called it renewable energy, I can guarantee that I'm going to get at least a few angry emails telling me that solar energy is dumb and I should just shut up about it. Drill, baby, drill, et cetera, et cetera. And that's because renewable energy, quote unquote green energy, has been so politicized. Now, let me be clear. I am by no stretch of the imagination a climate change alarmist. I don't have interest in alternative or renewable energy because I think it's going to somehow save the planet. And I completely agree that the subsidization of green energy by governments is a problematic thing, especially like for wind energy, which I don't think is nearly as efficient and doesn't have nearly as strong a future as, say, solar. But all of that said, I think in and of itself, renewable energy is a good thing, right? I mean, if somebody can develop energy production that is cheap and it's efficient and, it pollutes less, what's not to love? I just don't want the government involved in it. I just don't like the politics surrounding it, and that's not really. I don't even want to get into that because it's just it creates an argument that is way out of the scope of this particular show. But I do think that there is value in things like, say, solar energy. My daughter, I mentioned, she was in town and she was telling me about her job and some of the work that she's doing. She works for a company called Solar Sisters, and what they do is they support female entrepreneurs in Africa who are developing solar energy businesses. So in effect, they are creating solar energy systems in very remote areas of Africa that don't have an electrical grid. They don't have any energy infrastructure at all. So they're bringing this energy source into these places where they don't have electricity. I think that's pretty cool, and that's the kind of thing that solar energy can do. And I'll be honest with you, I have solar panels on my house. They came with the house, and at first I was like, I don't know if I want solar panels, or was pretty apathetic about it. But when I see my electric bill compared to some of my neighbors, I'm really, really glad I have those solar panels. Now, granted, I live in Florida, so there's a lot of sunshine. And so this is a good place for solar energy. Putting solar energy in, I don't know, Washington State where it rains all the time, maybe not such a great plan. But all I'm really getting at here is that there is value in the renewable energy sector. It can be a good thing if you just try to take the politics out of it. And here's the bottom line. No matter what you think about it, green energy, renewable energy, it's here to stay because the powers that be want it to stay. And governments are going to subsidize it. And I think even with a president like Donald Trump, who's going to be much less enthusiastic about supporting the quote-unquote climate change agenda, the rest of the world is going to keep going right forward. And the vast majority of demand right now for solar energy is in India and China. And that's not going to change no matter who's the president. So, I just think that this is a dynamic that's here to stay again. And I think it's important as an investor, if you're interested in precious metals, and particularly if you're looking at silver, you have to factor in the very fast-growing demand for solar energy, and silver is a huge part of the production of solar energy. I did a little research on this a while back and found that each solar panel uses about 20 grams of silver. So that's a little over half an ounce, about 0.64 ounces. And this is a relatively small amount, but the total adds up really quickly when you consider the number of panels that are produced each year. The solar industry alone used approximately 100 million ounces of silver in 2023, and that accounted for about 14% of total silver demand. Now, there's actually some studies out there. There was a group, I think in Australia, and they found that projecting forward like 10 or 15 years, that solar energy and renewable energy production could account for upwards of 95% of the total silver demand. If that comes true, think about where we are in terms of price now, and what the price would have to be to accommodate that large of a demand surge. It's interesting, too, because if you talked about this several years ago, analysts assumed that the amount of silver in solar panels was actually going to decline over time because the thought was they would develop new technologies and they would be able to phase silver out because silver is relatively expensive. But a Saxo Bank report back in 2020 actually disputed this claim. They said, quote, potential substitute metals cannot match silver in terms of energy output per solar panel. And they said further, due to technical hurdles, non-silver PVs tend to be less reliable and have shorter lifespans, presenting serious issues for their widespread commercial development. And as it turns out, it appears that this analysis was correct because the newer, more efficient solar technologies that are coming out now use about 20 to 120% more silver than the older panels. So, we're already seeing, again, this surge in industrial demand due to green energy applications. And just looking at the preliminary data for 2024, the Silver Institute projects that demand's going to, and this is industrial demand will set a record in 2024, topping 700 million ounces for the very first time. And on the other side, you have declining mine output. So the market is likely to see its fourth consecutive supply deficit. So this is part of this whole supply-demand dynamic that I keep talking about. We've got a lot of silver being used, and the creation of silver, or the new silver that's coming into the market, that's relatively flat. Talking about mainstream analysts, folks over at StoneX, they noted that silver ran a cumulative surplus from 2011 through 2023. And this was despite the supply deficits that we saw over the last couple of years. So in other words, if you take all of the surpluses, more silver mined and gotten out of scrap than was used, you add all of that up, we had a surplus of 78,000 tons. And that was about 2.6 times the entire 2024 industrial demand. However, the analysts pointed out that investors, quote, were more than up to the task of absorbing this metal with over-the-counter investment of just shy of 100,000 tons and ETFs almost 12,000 tons. Quote, from late 2024, however, the fundamental balance moves into a deficit that will expand substantially over the next few years on the back of solar, AI, and transport electrification underpinning an increasing rundown in inventory. In other words, we had from 2011 forward through 2023, we actually had, if you add all of the surpluses up, we had a total surplus, but we went into deficit last year. The StoneX report actually mentions something else that's important in the industrial demand sector, and that is the development of AI and the ramifications for silver in that sector. AI relies on what is known as high-performance computing, and you'll often see this abbreviated as HPC. So these are specialized AI chips. They're high speed, and they are necessary for the level of data crunching that AI requires. Now, the reason that we're seeing silver used so much in both renewable energy and AI is that it is the most conductive metal for electricity. It is a key component in circuit boards, semiconductors, connectors, all of these things that are necessary for computing and energy production. And as far as AI goes, silver is vital in reducing the electrical resistance and enhancing processing speeds and meeting the requirements that AI brings to the table. So another part of the AI dynamic is that AI-driven services are hosted in these massive data centers, and they require advanced cooling systems along with efficient electrical transmission. And silver is used in heat dissipation materials and also high-speed connectivity components in these big data centers. So again, more demand for silver. What I'm driving at here is there's no reason to think that this industrial demand for silver is about to lag anytime soon. When you hear that solar panels may take up to 95% of all of the silver offtake in 10 or 15 years, that may be a wildly high projection, but I do think it's very fair to say that you're going to continue to see growing industrial demand just because we're an increasingly data-driven electrified world, right? So I mentioned the supply deficit already. In 2023, the silver market charted a structural deficit of 184.3 million ounces. And the projection is for an even larger supply shortfall in 2024, somewhere in the neighborhood of maybe 215 million ounces. And that would rate as the second largest silver market deficit ever recorded. So what does this mean? Well, basically what's happening is there is more silver being used than what is being produced by mines and through recycling. And that means that silver users are having to tap into above ground stocks in order to meet this demand. Now, there's plenty of silver out there, right? That's not being quote unquote used. It's sitting in vaults. It's sitting in the big bank vaults. It's there. Most of this is on the investment side of the coin. But in order to free up these stocks to be used to meet the industrial demand, the price of silver has to rise, right? So think of it this way. If you're a big bank, you're holding on to this big pile of silver for investment purposes, and ABC company over here needs a bunch of silver to produce solar panels. It's going to take a increase in the price of silver for that bank to be willing to let go of that silver so that it can be used in industry. So that's what we're seeing right now. And this should ostensibly have a really solid underpinning for the silver price. There's another issue to take into consideration on the supply side. And that is the fact that silver production doesn't tend to respond very quickly to rising prices. And interestingly, if you look at the kind of longer term trend in terms of silver mining, it has been declining, silver mine output. It has been declining for nearly a decade. So mine production peaked at 900.1 million ounces back in 2016. Here's the catch. Only 20 to 30% of the world's silver comes from primary silver mines. In other words, you're only getting about 20 to 30% of your silver from companies who are exclusively focused on silver mining. 70 to 80% of silver mined globally is actually produced as a byproduct of mining other metals, so like copper, lead, zinc. So when you just think about this in terms of the market, when the price of silver spikes, a lot of people that are producing the world's silver don't really care. I mean, they do care, right? They're happy to pocket that money. But because they're focusing on other metals, say they're a copper miner, they aren't going to adjust their operations to a rising silver price in the same way that they would if, say, the price of copper, the metal that they're actually producing, spiked. So the bottom line is that silver production does not rise quickly just because the price is going up. So given these dynamics, Metals Focus forecasts that while we will see record silver prices over the next 5 years, and when we say that, we're talking about silver over $50 an ounce, they say, quote, mine supply growth is likely to remain modest with only minimal increases globally. And even if mining companies allocate significant resources to finding new sources of silver, developing new mines, it's going to take time for that production to ramp up and ease this supply shortage, right? It's not like tomorrow they can open a bunch of new mines and bring a bunch of new silver into the market. Mining has a very long timeline. So it takes a long time for the production of silver to match up with the demand. Again, according to Metals Focus, quote, it is implausible. That's a strong word. It is implausible that new production could balance the current deficits over the short to medium term. For those shortfalls to end, we are instead dependent on recycling and demand to react to the forecast price rally. So in effect, what they're saying is that if recycling can't increase enough to meet the supply shortfall, we're going to have to see the adjustment on the demand side of the equation. And I don't think that's highly likely. If we have $50 an ounce silver, you're going to see a vast increase in demand, I think, on the investment side. Because right now, we've really just been talking about the industrial side of the coin right now. Silver is obviously very important in industry, and that accounts for a little over half of silver's demand. But fundamentally, silver is money, and it has been money for thousands of years. It is a monetary metal. It tends to track over time with gold. It's much more volatile. The price is much more volatile than the price of gold, and that's because of this industrial component to its demand. And, that fluctuates and it causes a lot of supply spikes up and down. But ultimately, it is money. And ultimately, if you look at a chart over time, silver typically runs along with gold. And looking at the last year or so, if we're going to accuse silver of being a laggard, I think it's due to softness on that investment side of the coin. Investment demand for physical silver, in fact, is the only market segment expected to contract in 2024. The Silver Institute forecasts that investment demand will fall by about 15% to a 4-year low. And that's about 208 million ounces for those of you counting at home. The investment losses or the lagging demand was actually concentrated in the United States, where coin and bar sales are on track for a 40% decline to the lowest level in since 2019. Physical silver investment demand has also dropped in Europe. And this kind of mirrors what we've seen in the gold market, because while we've seen a huge increase in the price of gold, we've seen a lot of demand for gold over the last year or so. We especially see that in central banks. Most of that demand has been focused in the East, in Asia, China, Japan, the Middle East. That's where we really saw this demand for gold. Even with the price rally that we saw in 2024, demand in the West kind of lagged behind. That was the factor that never really kicked into gear. And I've heard a lot of people in the precious metals analysis business say that when Western investment starts to catch up, starts to get with the program, so to speak, you could really see this bull rally in gold surge to an even higher level. And of course, that would probably take silver right along with it. And it's interesting, if you look at the silver demand, while it has been really slow and laggy in the West, India is expected to chart higher bar and coin sales in 2024, thanks to the bullish price expectations. And they had a big cut in the country's import duty, so they lowered taxes, and that lowered the price a bit and also helped that demand. But again, lagging in the West, surging in the East, which kind of tends to be the typical play of the last year in terms of precious metals. There's a really good article over at moneymetals.com/news by analyst Jesse Colombo, and he makes a really interesting point. He argues that this kind of bearish sentiment in the investment world, especially here in the West, it's actually kind of bullish if you apply some contrarian logic. So as Jesse explained it, quote, the core idea behind this approach is that the crowd, or the so-called dumb money, tends to be wrong more often than it is right, and especially at major market turning points. So as a market peaks, the crowd becomes excessively bullish. I think maybe we're seeing that in the stock market right now. And at the bottom of a market, the crowd tends to become overly bearish. So, as Jesse puts it, consequently, adopting a strategy that goes against the crowd often proves successful. And this is the precise approach taken by insiders or quote-unquote smart money. Now, Jesse argues that the crowd's sentiment towards silver, especially the big money investors here in the West that we've seen over the last year or so, is still deeply bearish, which should be music to the ears of contrarians and silver bulls alike. So I kind of like that. I will put that article in the show notes because it's worth checking out. Now, you could take Jesse's argument and say, well, Mike, you just said the mainstream is getting more bullish on silver. So is this the crowd? And does that mean you're wrong? Well, I mean, first I would say that while there is definitely growing mainstream interest in silver, and I've seen several analysts talking about silver having a good year in 2025, I've seen a lot of positive price projections for 2025. I still wouldn't call it a crowd, right? At least not yet. You're not turning on MSNBC or CNBC and seeing big segments on silver, right? And more importantly, as my wife is very fond of saying, even a blind squirrel finds a nut every now and again. I mean, at some point, things get so obvious, even the dumb money figures it out, right? So here's the thing. Here's kind of what I'm driving at. If you're bullish on gold because of the fiscal mess we're in and the Fed's monetary malfeasance, the likelihood of ongoing price inflation, and you should be bullish on gold for these reasons, then you should also be bullish on silver as well, because historically, silver, again, tracks with gold over time. Silver is a monetary metal. And furthermore, if you look at the historical performance, silver has tended to outperform gold in a gold bull market. But this typically happens in the latter stages of the gold bull run. In other words, you'll see gold run up, you'll see silver lag behind, just as we did last year. And then at some point, silver has a very rapid and sharp price increase, closes that gap up, catches up with gold again, and then typically even outperforms gold in the latter stages of this market. And there are some technical indicators in play, along with the supply and demand dynamics we're already talking about, that kind of indicate that this is the setup that we're in right now. And in particular, we have the gold-silver ratio. And this ratio basically just tells you how many ounces of silver it takes to buy 1 ounce of gold. And in the last couple of weeks, it has surged to over 90 to 1. So it takes about 90 ounces of silver to buy an ounce of gold. And if you see a 90 to 1 gold-silver ratio, what this is telling you is that silver is extremely underpriced from a historical perspective compared to gold. In other words, you could put it this way: silver is on sale. And I've talked about the gold-silver ratio several times on the show. I think it's a very interesting metric. It's easy to understand, and it has historically been used to gauge the silver market because of silver's fundamental relationship with gold. And you will talk to some people out there who think that the ratio has broken down and it doesn't matter very much, and that it's not telling us really anything about the market anymore. But most of the people that I know and really respect, who are, kind of eyeballs deep in the silver market, disagree with that assessment. They'll tell you that the gold-silver ratio is still important. There's still that fundamental relationship between gold and silver. And yes, the ratio definitely runs wider than it used to on average, but the fundamental relationship is still there because, again, they are both money. So, the last time we saw a gold-silver ratio over 90 to 1 was in the early days of the pandemic lockdowns. And in the modern era, this gold-silver ratio has averaged between 40 to 1 and 60 to 1. So we're at 90 to 1, right? When the gold-silver ratio rises far above this historic level, and this is the modern historic level. If you go back, it was actually narrower than that. But be that as it may, 40 to 1 to 60 to 1 is kind of that ballpark today. It tends to snap back quickly to that mean when it gets way out of whack, and it's way out of whack right now. Again, although this ratio has run at a higher average since the U.S. government demonetized silver in 1964, we still see those sharp returns to the mean when the gold-silver ratio expands. And this typically happens because the price of silver rallies to close the spread. And this goes back to the fact that silver tends to outperform gold in a gold bull market in the latter half. I talked about that snap up in price. This is what we're talking about. The gold-silver ratio tends to get wide in the early part of a gold bull run, and then it corrects and gets back closer to that average. So I'll give you a couple of for instances. The gold-silver ratio dropped all the way to 30 to 1 in 2011 after rising to over 80 to 1 during the money creation of the Great Recession in the wake of the 2008 financial crisis. So it snapped back even below that historical average of 40 to 1. And we saw a huge rise in price in 2011 in the price of silver. More recent example of this kind of snapback, I already mentioned the COVID era was the last time we saw the ratio over 90 to 1. It actually got all the way up to 123 to 1 in the early days of COVID hysteria. And then it plunged to around 60 to 1 as central banks around the world cranked up the money creation machine to cope with the governments shutting down their economies. So, again, summing it up, from a historical perspective, when you see gold-silver ratios well above the historical average, it tells you that silver is underpriced compared to gold, and that there is a strong possibility or probability that silver is going to go on a bull run to close that gap. So when that happens, hard to tell. I'll be honest, I kind of expected to see silver starting to close that gap sooner than we have, but I say this all the time. I don't have a crystal ball, right? I can look at dynamics, I can look at fundamentals, I can look at history, I can make predictions, but it's really hard to put things in timelines. And this is especially true when you're talking about these macroeconomic factors, like something like monetary policy. Monetary policy plays out over a long period of time. And I can tell you that, artificially low interest rates and money printing will create inflation. It creates maladjustments in the economy. It creates misallocations, and those things have to correct. So as a central bank tries to normalize interest rates, it's going to break the economy. We kind of know that's going to happen, but the timeline, much more difficult to predict, because I talk about this all the time on the show. I look back at the 2008 period and I see in 2007, the Fed was already cutting interest rates, right? And it was all the way, a year later when we actually saw the financial crisis break out. So that bunny trail basically just to say I don't like trying to predict things on timelines. I'm looking at things in kind of a big picture perspective. And of course, I guess it's probably always wise to give the disclaimer: past performance does not guarantee future results, right? History doesn't always repeat, but as the saying goes, it does often rhyme. Anyway, all of that to say, I always find it interesting when the mainstream people start to sound like me. And I'm starting to hear that kind of chatter about silver out there. There are people out there in the mainstream investment world that are looking at the dynamics of the silver market right now, and they're saying, hey, silver may be a good bet as we move forward. It may shine in 2025, as one of the headlines put it. And here's another interesting point, or an important point, I think, is these mainstream analysts really aren't factoring in any kind of economic chaos, which I think is entirely possible given the catch-22 facing the Federal Reserve when it comes to monetary policy. And I've talked about this. I did a whole show on this last week, so you definitely want to go back and check that out if you haven't listened to it. But, long story short, the Federal Reserve needs to lower interest rates in order to protect this economy because there's so much debt. I did an article this past week that's over at moneymetals.com/news on the fact that we've seen a surge in corporate bankruptcies because they're laboring under these massive piles of debt and higher interest rates. We've talked a lot about the issue with the national debt and government borrowing and spending and how that's more difficult because of this high interest rate environment. So the Fed needs to lower interest rates. Trump is saying, I'm going to push the Fed to lower interest rates. On the other hand, I would argue the Fed also needs to raise interest rates because inflation is not dead. We still have every inflation metric way above the Fed's, mythical 2% target. So it's a catch-22. We have a broken economy, and at some point, these things are going to manifest, and the mainstream's not taking this into account at all. They're all soft landing, inflation's going to be under control, everything's going to be fine, and they're still bullish on both gold and silver. I think that's a very important point for folks to consider. They are not seeing the big picture in terms of the damage done by decades of monetary malfeasance and fiscal malfeasance by the federal government. And yet we're still seeing this gold rally. We're still seeing silver rally. We're still seeing this positive kind of mindset in terms of precious metals developing without them even knowing the full picture. And when I say it's entirely possible that we could start to see some economic chaos, I mean very likely, at least in my opinion. And again, I've covered the subject in depth. Check out last week's show if you haven't done it already. So all of this to say, there are, I think, a lot of reasons to like silver right now, especially thinking that silver is around $30 an ounce. The record high is just below $50 an ounce. We've got gold sitting close to record highs even now as I'm recording this show. And as I said, the signs, the supply and demand dynamics, the gold-silver ratio, other technical points, everything points to silver being on sale. What do you do when something's on sale? You shop it, right? This is a good time to consider buying silver. So if you're interested, if this is something that's piqued your desire to maybe get some silver, give Money Metals a call today, 800-800-1865. Talk to one of our precious metals specialists, and they can help you see how silver might fit into your investment strategy. Gold as well. These folks are fantastic. They're knowledgeable. They're not just salespeople. They know the markets. They know what's going on with the economy, and they can definitely answer questions and help point you in the right direction in terms of products and what's going to work for you. And I know a lot of people don't like to talk on the phone. Don't have to. You can go to moneymetals.com and chat with the precious metal specialist online through online chat. Or if you know what you want, you want some silver gold eagles, you want some silver bars, you can find those products on our website, order directly online, have that product shipped to you, or we can also store it in our state-of-the-art bullion depository, bigger than Fort Knox. All of the security features and auditing and all of the things to give you peace of mind. So check it out. Give us a call today or go online, moneymetals.com, and take advantage of silver on sale. By the way, premiums are also pretty low right now on both gold and silver because of the lack of physical investment demands, especially here in the United States. So you can get some deals right now, so check it out. And with that, I'm going to call it a wrap for this episode of the Money Metals Midweek Memo. You can get more information on all the stuff I've talked about on the show today and more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, get on our email list. And of course, you can subscribe to the Midweek Memo podcast on your favorite podcasting platform. And when you do, you'll also be able to tune into our Market Wrap podcast that airs every Friday, where you will get a quick overview of the week in precious metals, along with interesting conversations between yours truly and interesting people from the world of gold and silver, economics, and investing. I very much appreciate you listening to the show. Thank you so much. I know there's a lot of stuff vying for your attention out there, and I appreciate the fact that you spend a little bit of time with me each week, and I am grateful for that. So have a great rest of your week, and I will be back here next Wednesday.